Hello there, this is FairBinaryOptions.com, and it has been a while since we took a look at the Great Britain Pound US dollar, and this is what I intend to do here. So FairBinaryOptions.com. Now the Great Britain Pound US dollar is actually enjoying, of course, with you put the quotation mark there, it is enjoying a nice move to the downside, and this move to the downside started, surprisingly enough, not with these highs from this moment of time, but started from here. Why? As you can see, we have here a contracting triangle that actually, or a triangle that actually is contracting here. Let me put this one, let's make it like this, and then of a different color like this. And if you clone the line and you put it here, this would be the contracting triangle that goes all the way, so this to be A, B, C, D, E. The triangle is contracting, and it means that the impulsive move we should look for, or the move to the downside, starts or started from this moment of time and not from the absolute highs. So if you are looking to count the waves, then you make sure you count the waves from here and not from the absolute highs. So this is one clue that we already have. How about the next clue that the chart is offering us? Well, I'm talking about, of course, of this falling wedge here. From here to here we have a beautiful falling wedge. This falling wedge, let's make it black, and like this. This falling wedge, it is actually being broken, so broken here, and then it implies that the whole move from here to here is nothing but an impulsive move that ended at this moment of time. I would say in terms of Elliott waves, it is an impulsive move with a fifth wave extension, meaning that the fifth wave is the longest one, and therefore this should be our fifth wave. The whole impulsive move started from here and goes with the following: this being wave 1, the second wave, the third wave, the fourth, and then the longest wave of this whole structure should be this one here as the fifth wave. So in terms of Elliott waves, let's write on the screen the first wave here, then the second wave in the form of a running correction, the third wave to the downside, which is longer than the first wave, of course, even extended, and then the fourth wave as a simple correction this time in the case of a classical A, B, C. Why simple correction? Because in order for the principle of alternation to be respected, then you need for the second and the fourth wave to be different. And then of course the fifth wave all the way to the downside here in the form of a falling wedge. And this is the impulsive move, and I would say that the impulsive move is completed 1, 2, 3, 4, 5 with a fifth wave extension. What next? Well, this in my book is only the end of a first wave of a bigger degree, and now we should look for more, let's say, weakness to come if this will turn out to be a running correction like I'm expecting. Now usually a running correction comes with a flat or a flat pattern after the five-way structure. Well, what do we have here? If you go on the 1 hour chart, what do we have here from this moment of time? Remember, this is the fifth, and this is the end of the first wave. So what do we have here? Well, we have exactly the same thing that I'm discussing with you. I'm talking about a wave A out of this degree now. So wave A, this to be wave A in red, like this. Then the B wave to the downside, and the C wave that has just been completed the other day, or maybe is not really completed by still forming here, but the C wave to be done around this level, A, B, C. And now we should look for what? We should look for an X wave, a move that should channel extremely well, and that should go below the lows in the previous impulsive move, and those lows were what? 165.34. Well, if we are looking for a move to the downside now, So this to be A, B, C, and looking for a next wave, and then a contracting triangle there, and then for price to move to the downside. And this should be the end of the second wave out of this degree. And that is the plan for, of course, trading the Great Britain pound US dollar on this Thursday the 28th. Now this is the bigger picture like we've discussed. And what to do, actually let's put it on the 4-hour chart and zoom in a bit. So this is our analysis on the fair binary options. So what to do here when you expected lower values? Well, when you expect lower values and you're trading binary options, then the only way to trade a currency pair is through put options, and this is what we are going to do here, buying put options with end of week expiration date. Now don't be afraid, because we are now waiting actually for 1 week for the option to expire. But what we are doing here is we are waiting for 2 days, because this is Thursday. So buying put options with end of week expiration date for the Great Britain pound US dollar, based on the fact that the impulsive move on one hand is completed and the first correction out of a possible double free running is completed as well, and therefore lower values should come. Have a great day, and thank you for being here. FairBuyNoviOptions.com. Bye bye.